All right, welcome to another episode from the Chart Reader. So we are looking at a familiar set here. We're going to look at NVOS, TTOO, MCOM, and FFIE, okay? NVOS has some really interesting things happening, all right? And I mentioned this one on the last video. I'm going to say it again. The 50 moving average line is a real big story here, all right? And we'll talk about that shortly. There is also some buyback news, and I often say it. Buyback is good. All right, so hopefully that will be enough to get over the lines. But end of the day, you know, I don't care about news. I care about getting over the lines. All right, I think I was expecting a little bit more today, but hey, taking a green day on a bad market is not a bad thing. All right, so TTOO, you know, the biggest thing for me on TTOO is the volume. We're actually under 1 million shares per day now, and well, that's a significant drop, all right? There is like a potential for what I call a bottom feeder swing. That's not the professional term by any means, but yeah, there's a shot to make some money in TTOO. But again, I said the worst isn't over. I still stand by that. But hey, sometimes you can make money while it's still in the process of doing bad, right? MCOM, I said it the last time I covered it, I'm going to say it again. I'm a little biased on that stock. I have an inability to make money on MCOM. Every time I buy it, it goes down, and I kind of just avoid the stock. But yeah, it's getting some volume recently, and it's hard to ignore. And then FFIE, man, I wanted it to do well. It did not. I think it's at least worth revisiting, all right? But before we go any further and I give you more of my thoughts and opinions, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how these things are setting up short term. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself, and then the occasional diagonal trend line as well. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can please subscribe to this channel, share this video online with your friends, comment good or bad. Look, anything you can do helps me so much with these YouTube algorithms. But for real, just being here, giving me your time, conversating with me, oh man, I am so grateful for it all right? So let's get into NVOS. And look, I mentioned it the last time I covered it. I don't remember exactly when. It might have been around the 20th, but regardless, look, the 50 moving average is the bigger story here. I will talk about the buyback shortly, but I'm telling you, I think it all is about the 50 moving average, this red line, all right? We can see us actually use it once right there to go up. We then actually use it again right there to go up. We actually use it again right there to go up. And right now, look, we haven't been able to go up, but man, we're not losing that line. And truth be told, I thought we would. I saw this wick as well, and like, yeah, I really thought that this 50 would not hold. It's doing a really good job of holding, all right? So I cannot take away from that, all right? I think as long as the stock is over the 50 moving average, there's reason to be optimistic. Now, you know, I need to be over the 8 and the 20. I'm glad that we're over the 8. It's actually been a couple days over the 8, but yeah, 8 and the 20. And the 20 is pretty much on that 32-cent line right there, all right? So, NVOS really needs to use this as a rocket, because you know the reverse split trapdoor is anywhere around the corner. All right, this thing desperately needs to get to $1 very quickly. Otherwise, the company will pull the reverse split trapdoor, and bad things will happen. We saw it with TTOO. We see it with so many stocks, all right? Reverse split is always death, and we know that is an approved on-the-table tactic that can happen literally at any time. I have no idea when, but it's getting too close to comfort, because I believe the deadline is sometime in mid to late November, roughly a month from now, right? So just keep that in mind. But yeah, just use the 50 to bounce as we have before, and man, who knows what it could bring, right? But if we lose the red line, if we slip below 28 cents on NVOS, I think it will be a very fast fall to 23, if not even lower to 20. All right, so Excuse me. The next thing to talk about is the buyback. All right, look, generally speaking, buyback is a very good thing. Okay, it very, very much is a good thing. Okay, the way that a stock price is measured, it's per share. So when you're removing shares, when you're buying back shares, you're now dividing by a smaller number, and that generally helps price. Like, that's kind of the logic behind why buybacks are good, okay? For me, what I care more about is what news does to my lines, whether it is one of the manual ones that I draw myself. Sorry about that, that was my phone. Whether it's one of the manual ones or whether it's the moving averages. Like, the buyback news, in all honesty, set expectations for me that today was supposed to be a really big day. Okay, I really actually thought today was going to get over the 32-cent line and maybe justify a reason to try to swing this. Okay, it didn't do bad. And again, we're not in a good market right now. So I know this looks like an insignificant nothing, but green in a sea of red ain't too bad. Okay, so I'm still not a firm believer that the buyback news is going to do an amazing thing here. Okay, I think the worry of a reverse split at any time far overshadows any sort of good news. Because just one more time, we literally need a 3x the price and then gain a little bit more than 10% after that, right? Like, we need to times 3 this to bring us up to 90 cents. If we gain another 10%, that's actually only 99 cents, and we're under $1, right? So we need to 3x and then get another like 12% after that. That's asking for a lot. It is. Now, again, we've done some silly rockets from down here to 20 all the way up to 50, we'll call it. That's not quite 3x plus another 12. Now, this one went from 13 all the way up to basically 50, right? That one can do it. This one, I don't think did it. We went from 30. Yeah. So in one of them, we did it. In the other ones, we didn't, right? And like, I think, to me, I don't know if the 50 is going to have enough volume of a bounce to get us up in the dollar. And I think that's what's scaring people here. All right. Look, MACD still positive, but it's definitely on its way down. I don't like that RSI. Clearly, red is over green. You know, I like green over red. More than anything, this is some scary volume. It really, really is, all right? Yeah, there's a couple more greens than reds, especially since the 16th, right? I for sure see that. I'm so sorry I'm getting all these notifications. But I really, really don't like how substantially lower we are than the 50 moving average, the daily volume, right? Like, we should be 90% higher than we are, right? And I should be clicking right here, right? Like, we should be near 70 million. Instead, we're at 8 million. We've pretty much given away 90%, right? Like, just give or take rounding numbers, right? So I think volume is scaring me. I think reverse split is scaring me. If this can get over 32, there's some potentials. There really are. I think going over 32 might bring like a 40-cent target right here. You can see I'm at 39 cents, right? I don't think breaking this is an automatic belief that we're going to get to 55. And in all honesty, if you know I'm not confident in 55, you can barely imagine me talking about $1 plus, you know, filling the gaps, right? So, yeah, it's weird. It's a little bit of a 50-50 like review here, right? Again, I know that there's some good. I think there's more bad overshadowing it is kind of the daily analysis here, all right? Where are we on the weekly? I mean, we're actually under the 8 on the weekly. So far, so good, right? It's trying to claw its way up. We still have a couple days, but yeah, we're under the 8, right? We're definitely under the trend that we've had, right? So, and I kind of didn't talk about it here, but yeah, we lost this trend. It's staying a little more horizontal than like a hard drop from losing the trend, but yeah, even, because look, right now I'm going from here to here. Let's say I lower it to there. Let's just say, what does that do? We're still under that. We're still under that trend line. I'll leave this. I think I'm okay leaving this. Basically moving it from this corner to this corner instead of this one to that one, right? So I'm okay with that, actually. The one thing I don't like, though, is now my trend line was super steep, less steep. It's less steep, right? Like we're starting to flatten out, and that's never a good thing. So NVOS, I think there's more to worry about than like, all right? TTOO. All right, so let's get into this. So, okay, there's a term I like to use, and it's called a bottom feeder swing. Okay, now you hear me say this often. Sometimes we fall really far from the 8 moving average, and then we'll get to it. Then we'll fall a little bit, and then hey, maybe we'll be able to get over it and get to the 20. Okay, that's kind of the hope right here. All right, and I'm going to kind of zoom out and show that like this actually happens often. We fall away from the 8, we kind of get close to it. We fall away from the 8, we kind of get close to it. Can't really get over it, can't really, and then we fall away from it, and then we get close to it, try to get to the 20, and then go, and then all we really end up doing is just going away from the 8, close to the 8, away from the 8, close to the 8, away from the 8, close to the 8, away from the 8, close to the 8. We went really far away from the 8, we're now really close to the 8, okay? So the question is now going to become, can we break the line and go or not? Now, I took a little pause right there because I see that this thing's actually going up after hours, all right? I do see that, okay? I always say after hours is an easy way to get faked out. That's why my reviews are generally, if not always, I don't know why I say generally, they're always regular hours, all right? I have no actual reason to believe that we're going to break the 8 moving average, all right? We went away from it. We've now come to it. My honest expectation is we're going to go away from it again, okay? Why do I think that? For a couple of reasons. Number one, we've fallen below our all-time low support, okay? Now, I will be drawing one more new one down here, but just really quickly, you often hear me say when we lose all-time low support, I'm ready to lose 20% and then another 20% and then another 20% and so on and so on. This thing went from almost 7 to below 6. That is a devastating drop. And that's what happens when you lose some all-time low supports, all right? I will be honest with you. If I was to give an expectation, what I think is going to happen is we're going to fail this break. We're going to lose 514, and then we're going to go down another 50 cents. And that'll pretty much take us to 460. That's my guess, okay? If I'm wrong, what will basically happen is we're going to start making a move up, obviously, right? Because I'm saying we're going to go down. But yeah, if we can break the 8 moving average, which is sitting at $6.19, I think if we can start clawing our way into like $6.22, there's a decent reason to believe it'll come up, maybe even relatively quickly. I got to raise this line because that line's not actually accurate to basically $7. All right. There is a shot at 7 if 619, 620 breaks. And look, that's a little bit more than 10% because you're going to add 60 cents on that. That'll take you to 680. Yeah, give or take a little bit more than 10. Now, if we can break $7, that's where things might get interesting because that's where you've got a lot of red to green, and hey, maybe it'll go there. Do I really think it's going to go there? I don't. I imagine if I go to the weekly, ooh, interesting. I'm going to draw this from the weekly. I think that's normally, you know what, I'm on the, I don't think I should do that. No, I'm going to do it. I am. I'm going to take the bottom of this guy on the weekly and call it resistance. I think it's important. It's an important thing to do, actually. Maybe there's a shot from 7 to 12.20. And then obviously the 20 moving average itself is at 1570, right? But again, I still think we're not breaking the 8 moving average, all right? RSI is relatively flat. MACD is definitely in the negative side. And then again, I kind of started the video, the opening thoughts with it. We're pushing under 1 million shares a day. Like this thing at one point was in the 2 millions. This thing was averaging 1.2 million. We're now just, the interest has reverse split is not good. Again, I know there's things in the pipeline and all that sort of stuff, right? But bad things happen under all the moving averages. Bad things happen as you lose these all-time low supports. I really do think that it's more than likely going to lose 514 than it is going to go to this like 7 or 10, right? If I'm wrong, it'll break the 8 and go, and that's basically what I'll be looking for. But, ooh, excuse me. I came to the weekly already. Look, there is for sure a lot of red all the way up to here. I think it's a little... I think it's a bit much to take this weekly number and use it as a target. I think this thing is just coming off a reverse split. It's still very daily heavy, and yeah, I'm not a buyer just yet. I'll say that much. Okay, let's come into MCOM real quick. And for the record, I think I kind of hate the stock. All right, and I'm being really honest with you all here because, yeah, I kind of have a bias here, and my bias really is I don't like this stock, okay? I have tried to buy this a couple times because I thought it was looking really good, all right? You know, I say it often, bad things happen under the 8 and the 20, and that's literally where this thing is living, right? There are moments where it looks like it wanted to break the 8 and the 20. There was actually a moment where it made a decent little run, right? But it couldn't really sustain it. There was another one right there, and I know I have not really looked at this thing since mid-September for sure, okay? The real interesting thing that I'm seeing is actually down here, okay? Volume's picking up here. And rather substantially, all right? When I was looking at this thing, the thing was barely, and I don't want to say barely because that's a big number. Not a lot of stocks can hit 13 million or 20 million, right? But we went from, let's call it 20, basically all the way up to 50. Like, we've 2x'd the average daily volume. That's not an easy thing to do, especially to do for a stock that's actually going in all-time lows, right? I'm not sure what the interest is here, all right? I'll be very honest with you. If there's any news, please share it with me in the comments, all right? But all I'm seeing is a stock that's continuing to trade under all 5 moving out. Break all 5, get above all 5, and you'll fly. Fall below all 5, and you'll die. And that's all this thing knows how to do. Okay, I don't like a stock that's under the 8 and the 20. All it knows how to do is stay under the 8 and the 20. I don't get why a lot of people are starting to buy this thing, and you can actually see more people are buying it than selling it. Like, these are all real big days of volume of buys. These are little sell-offs. Right? Like, more people are holding than selling since the 16th. We're still going down, and I don't get why. All right. I don't have a lot of good to say here. You know, I'm not here to tell you what to do with your hard-earned money, right? But for me, there's more reason to avoid this than to jump in. I really don't know the story. Please let me know if I'm missing something. But again, I think the one important takeaway here is we're in the middle of some silly trading. All right, and don't let silly trading moments mess up a good trading strategy if you have one, right? And for me, that's what MCOM is. Volume picking up is generally something that perks my ears and makes me want to look at a stock. But being under all the moving averages is a very bad and scary thing. You know what I mean? So I don't even think it's worth looking at the weekly because, yeah, look at this weekly. All we know how to do is live under the 8 and the 20. And really, all we know how to actually do is live under the 8. We sometimes touch 20, and that's about it, right? So I think there's way more to not like than like on MCOM. But again, I know a lot of people are seeing this like red, green, like there's some silly things happening. And this looks like the chart of a lot of the stocks that are like running 200, 300, 400, 500%. Like, I get that. But man, you don't want to hold, like we're not playing the lotto here. We're stock trading, right? So let me know your thoughts and opinions. This one was a little more opinion based than technical based, but yeah, technicals ain't looking that good. You know what I mean? So let me know your thoughts and opinions. All right. FFIE. Damn, this is disappointing, and I hope you see where the disappointment is. It's right here. All right, and listen. Juicy setups are much harder to hit in a bad market. Okay, and I know it sounds so cool to say I buy the fear. I know it sounds so cool to say that I love the dips and I eat the dips and like I'm above the fear. And when there's blood in the streets, there's there's so many cool phrases to make you sound like a really cool trader. Yo, there's a reason we don't touch a burning pan. It's because of the fear of burning our fingers. All right. And no matter how cool you like the font, I can't believe I just said the Fonz. I'm not like 70 years old, but like the Fonz was the coolest man around and he ain't touching no burning pot because that's just stupid. All right. So don't let the fear like that's the point to that. All right. FFIE, this right here, this 1-2 day. Oh man, this is a juicy setup that in a good market would have run. Okay, we're not in a good market. We had a beautiful RSI rise. We had a MACD that was definitely in the negative, but that was a continued good divergence. Volume just boom, 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 right? Like there were so many reasons to believe we would have broken the 20 moving average. The thing is, I stress confirmation in good markets, and you can for sure know I stress confirmation in bad markets, and that's what this was. Getting to this line once is cool. I'm not here for once. I'm here for sustained up, up, up. And that's what happens when you can't confirm. These lines are horrible, evil lines when they're your worst enemy. And it's not that hard to tell that at this moment right here, what did we do? We lost all 5 and died. And died from what was a $20 stock all the way down. Obviously, there was a reverse split, but the percentage still holds. This thing has lost way more than 90% of its value since losing all the moving averages in August. Again, reverse split doesn't change the percentage. It just moves the dollar amount, right? Where are we under the, and look, this kind of goes back to what I was talking about TTOO if you watched it. You go away from the 8, you come to the 8. You go away from the 8, you come to the 8. You go away from the 8, you come to the 8. You don't always go up to the 20. And when you go to the 20, man, it ain't easy to get over it. And where are we now? We are now under all 5 moving averages once again. 1, 2, 3, 4, 5. We're actually under, if I'm not mistaken, we're under the all-time low support. This is the biggest candle. That's where I would draw my support line. But those are all from the pre-split thing. Yeah, these are all fake lines. Like those are all, can I delete you real quick? Let me delete you. Let me delete you. I really think, though, we're going back down to that 75-cent line if I had to guess. Because, again, what do I always say? This thing's ready to lose 20%. This thing's about to lose 20 cents, give or take, and probably head to 90. Once it gets to 90, it's going to get ready to lose another 18 cents and basically head to 70. So be careful with FFIE. I think there's more to not like than like. I would not touch this stock under $1.23. Honestly, I probably would even wait until $1.20. I'll set $1.29 alert. I think I like $1.29. I don't think I would touch it anywhere under that. Hey, let me know your thoughts and opinions. Otherwise, as always, thank you.